Welcome back to Investing Talk Podcast. Today we're putting a fascinating company under the microscope, Westwater Resources. They have, well, a pretty ambitious vision, aiming to be a key player in America's critical materials supply chain. The big question we're exploring for you today is Westwater Resources a good time to buy now? Before we unpack all the details, if you're finding these discussions helpful, please take a moment to subscribe, like, and leave a comment. It really does help us bring more valuable insights to you. Also, if you enjoy what we do, maybe consider buying us a coffee. And of course, if there's a specific company you'd like us to look into next, just drop a comment below.
Yeah, it's a really compelling case study, isn't it? This exploration today will break down Westwater's core strategy, look at their current financial footing, how the market sees them, and, the very real hurdles they still face. Our mission is basically to give you the clearest picture possible of what's truly at stake here, so you can decide if their future aligns with your investment strategy.
Okay, let's jump into Westwater Resources then. What's their big play? Why are they drawing so much attention? What's the core vision that makes them stand out in what feels like a crowded market?
Right. Westwater Resources has a very clear, I'd say, ambitious strategic goal. They intend to be the first major U.S.-based producer of battery-grade natural graphite. Their main asset is the Kellyton Graphite Plant, which is currently under development down in Alabama. What makes this interesting, and probably gives them their spotlight, is that this market, it's overwhelmingly dominated by Chinese suppliers. Like, hugely. So their strategic position, it benefits immensely from the U.S. government's keen interest in, well, strengthening domestic supply chains for critical battery materials. Think of it almost as a national security play wrapped in an industrial development package. They're not just building a plant, they're trying to build a strategic industry here.
Wow, okay. That's a huge aspiration, disrupting a China-dominated market, becoming a vital piece of the U.S. battery supply chain. Sounds like a really powerful story. But when we strip away that impressive vision and look at the hard numbers, where do they actually stand financially right now? Are they bringing in any revenue from this national strategic level project? Or is it still very much, a dream being chased?
And that's the critical distinction, right?
Yeah.
Because it defines pretty much everything about this company's current status. As of Q1 2025, Westwater Resources reported, zero commercial revenues. None. They continue to operate at a net loss, and that's been a consistent pattern for quarters now. The company is squarely in the development stage for the Kellyton facility, which means their financial statements, they primarily show ongoing R&D, research and development, along with it isn't really on the horizon until that plant is fully operational and scaling up commercial production. It's a classic pre-revenue story. The investment is all about future potential.
No revenue, ongoing losses, and a massive plant still being built.
Yeah.
I mean, that sounds like a significant cash burn, right? Not just a trickle. So how are they actually funding all this? The construction, the development, what does their financial health truly look like without sales to back it up? How do they keep the lights on and the bulldozers moving for such an ambitious project?
Yeah, good question. According to their Q1 2025 balance sheet, the company raised approximately $2.0 million in net proceeds. And that was through at-the-market equity sales during that quarter. So this tells us they're primarily funding operations by issuing new equity, basically selling more shares, not from operating cash flow, obviously. While they show, modest liquidity, their cash and cash equivalents, they look quite constrained when you compare it against the ongoing capital expenditure needed for the plant's construction. They don't have substantial long-term debt, which, okay, that's a positive. But their capital structure clearly relies on additional financing. For instance, they're anticipating loans backed by U.S. Exim Bank support, which is still, very much in process, not a done deal yet.
Okay, so their main funding mechanism is essentially selling more shares, which for existing shareholders immediately flags that risk of dilution, right? Your slice of the company pie gets smaller every time they issue new shares just to keep things going. Given this reliance on equity and the fact they're pre-revenue, how do we even start to value a company like this? Can we put a traditional price tag on something so speculative, or are we looking at completely different metrics here?
Yeah, you've really hit on maybe the most challenging part of analyzing a company at this stage. I mean, traditional metrics like price earnings, PE, or PEG, they're simply not meaningful. There are no earnings, just persistent losses. As of, August 27, 2025, Westwater trades near 75 cents per share. We can look at price to book, PB. That's approximately 0.68x based on a market cap of roughly $59 million. Price to sales, PS, obviously not applicable. Sales are zero. But that PB discount, when you compare it to established miners or battery material producers who typically have PB ratios maybe 1.2x to 2x, it clearly reflects the huge development stage risks and, like you said, the lack of current revenue, discounted cash flow, DCF analysis, also not really feasible, no consistent cash flows to discount. So any valuation at this point is inherently speculative. It hinges entirely on them successfully executing the project and, frankly, continued U.S. policy support. You're not valuing current performance, you're valuing a highly uncertain future.
Right. Sounds very much like a market running on hope in headlines, maybe, rather than fundamentals. So given the lack of revenue, the reliance on equity funding, the dilution risk, and such a speculative valuation, how has the stock actually been performing recently? Is it stable, or is it as volatile as the business model sounds? What's the price action telling us about how investors feel?
Well, the stock's traded between approximately 70 cents and $1.20 over the past few months, and it's been characterized by pretty high volatility, which is, very common in these small cap, low float stocks, where only a small percentage of shares are actually available for trading, makes them super susceptible to news-driven swings. Technically speaking, support seems to be near that 70-cent mark, with overhead resistance maybe around $1.10 to 15 cents. Short-term moving averages are slightly downward sloping. The relative strength index, RSI, is kind of in neutral territory, so no extreme overbought or oversold momentum right now. What we're mostly seeing is a sort of sideways to bearish trend, with trading volume often spiking around key news events. It's definitely not a smooth, predictable ride.
And what are those key news events, the ones stirring things up recently? You mentioned these news-driven swings. What specific developments have impacted Westwater Resources stock? And are there any broader analyst opinions on the company we should know about?
Yeah, there have been a few significant points worth noting. On August 14th, 2025, the company gave its Q2 business updates, held an investor call. They reiterated progress, but crucially didn't signal imminent revenue. Earlier, back in July and May of 2025, they publicly supported U.S. Department of Commerce anti-dumping actions against Chinese graphite imports. That could be a future competitive tailwind for them, if those restrictions stick. They got a patent awarded for some Kellyton graphite plant innovations on May 27th, 2025. That's a positive sign, shows technological effort. And then, this is pretty crucial, on May 7th, 2025, they received that letter of interest from the U.S. Exim Bank for project financing.
Ah, the Export-Import Bank.
Exactly. That signals potential future funding, gives it a kind of government stamp of approval, which is powerful. But again, I have to stress, it's not yet a finalized binding agreement, still just a letter of interest. In terms of market sentiment, while broader analyst coverage, it's conspicuously absent. You don't see the big banks covering it. And insider activity. It largely consists of RSU vesting that's restricted stock units for employees becoming actual shares, not really significant open market buying by executives. Social media sentiment seems kind of neutral to cautious. Retail interest is there, but it feels largely speculative.
Okay, so a mix of promising but, like you said, not yet concrete news, especially that XM Bank letter, which could be a game changer if it actually solidifies into a real loan.
Yeah.
Looking ahead, then, what are the big events or developments we should be watching for with Westwater Resources? Things that could either dramatically boost the stock or, pose significant challenges. What's the roadmap for potential success look like, and where are the most dangerous pitfalls along the way?
Right. For short-term catalysts, you'd want to watch very closely for updates on major financing events for Kelly Fenton, specifically seeing that U.S. Exim Bank letter of interest convert into a binding loan agreement. That would be huge. A major de-risking event, potentially. Also, any announcements on construction milestones or plant commissioning during their investor calls, those would be key indicators of tangible progress. Are they hitting their targets? Long-term catalyst, well, obviously the actual startup of commercial graphite production at Kelly Fenton. That's the big one, still pending, and the timing is uncertain. We'd also be looking for broader legislative or trade policy shifts, more U.S. government support for domestic battery supply chains, maybe new tariffs on foreign graphite, and of course, any potential strategic partnerships with actual battery or EV manufacturers. That would validate their product and secure demand.
That roadmap definitely paints a picture of critical milestones.
Yeah.
But it also sounds like, a tightrope walk. You mentioned pitfalls. What are the major red flags here? The risks an investor absolutely needs to be aware of, even with that potential government backing.
Yeah.
Where does the company itself acknowledge its vulnerabilities?
Well, look, the company's own 2024 10K filing itself states there's substantial doubt about its ability to continue as a going concern without getting more external financing.
Wow, that's stark language.
It is. It's a legal phrase that, yeah, sends shivers down an investor's spine. The company is basically admitting it needs more cash to survive. Execution risk is extremely high. Any delays, any cost overruns during the plant construction and ramp up, those could materially impair their prospects, push profitability even further out, and there's just no guarantee they'll secure the necessary customer contracts or achieve cost-competitive production levels in a global market. Beyond company-specific stuff, there's commodity price volatility for graphite itself, there's dependence on macroeconomic factors impacting EV demand generally, and policy risk, right?
Yeah.
U.S. government initiatives could reverse or get delayed. That support isn't guaranteed forever. Finally, you've got sector-wide competition from huge, well-capitalized global mining companies, and the potential emergence of new battery chemistries that might need less graphite or none at all. It's a complex and pretty formidable web of risks.
Okay, so we've explored the bold vision, securing America's graphite supply. We've looked at the tough financial reality, no revenue, ongoing losses, the reliance on equity funding and that dilution risk, the speculative valuation, and this whole multitude of catalysts and, frankly, significant red flags. Given all this, for our listener trying to make sense of Westwater Resources, is it a good time to buy now? What's the bottom line here?
So our assessment gives Westwater Resources an overall rating of 3 out of 10. This is fundamentally a high-risk, pre-revenue speculative play. Its commercial viability is unproven. Its future is heavily, heavily dependent on successfully getting financing, completing construction, and then competitively operating that Kellyan graphite plant. Now, while government support for U.S. critical minerals does offer some potential upside, and it's a clear tailwind, yes, this is currently heavily outweighed, in our view, by the lack of meaningful revenue, the recurring losses, and that ongoing risk of dilution through equity issuances, at least for most investors. If you connect it to the bigger picture, it's a significant bet on future execution and continued policy support, and that's far from guaranteed.
And what does that mean practically for someone considering adding it to their portfolio, given that very low rating? What's the takeaway for our listeners who might be intrigued by this story, but understandably wary of the risk?
It means this is explicitly not recommended for long-term investment, not for the average investor. It might be considered for short-term trading, perhaps, but only by highly risk-tolerant speculative traders, people who are actively monitoring that near-term news, the financing catalysts, and can afford to lose their stake. For most investors, the risks here are simply too high for the potential rewards at this particular stage of the company's development.
Westwater Resources really presents a compelling story, doesn't it? But yeah, a high-risk situation. It's a company betting heavily on future potential and government support to overcome some pretty significant financial and operational hurdles in a really critical emerging industry.
Precisely. And, what Westwater Resources' journey tells you isn't just about this one stock. It's about the broader challenges and, yes, the immense opportunities in trying to build domestic critical mineral supply chains pretty much from the ground up. It really forces us to ask, how much risk are you truly willing to take on for future potential? Especially when that potential is so closely tied to national strategic priorities. It's a question that goes beyond just this stock, really, into the very fabric of industrial innovation and what it actually takes to bring a visionary project like this to fruition.